Hello traders, Gary Wagner here. Approximately 10 a.m. in Honolulu, making it 4 o'clock in New York. It is Monday, the 24th day of September 2012, and this is the daily report for gold and silver. Although well off of the lows that we reached in trading, we do have the precious metals under pressure as news has emerged of a continuing kind of scuttlebutt within the European Union. And that has, of course, caused weakness in the euro dollar and strength in the dollar. We have seen gold trade as low as 1754.80, the high 1768.60, and as you can see, we're just off the high currently at 1765 and change, putting it down about $7 on the day. Silver also trading under pressure this morning, and it's been down over 2%, currently off about 1.5%, down about 50 cents on the day. As you can see, current print just above $34 per ounce. We've had a low of 33.54 and a high of 34.34. As you know, I sent out a special alert to raise stops. Stops right now should be sitting at around just below 1750 on gold, and as far as we go with silver, we were in at about 33 is where our stop is. We'll probably suggest moving that up about 50 cents, maybe 33.50. Well, let's get right to the markets today. Looking at a daily chart, 1440 in terms of the minutes, and it is in Henkin format. You know, yesterday I did raise our stops. I raised them to just below 1750, low 1754, a little bit too close for comfort. At the same time, the stop was not hit. But most importantly, we're well off of the lows here. And here's what I'm looking at. At some point, I absolutely believe we're going to see some sort of a correction. The trick is, where will we see that correction? Because when this market rallies with the kind of strength that we have seen, we do not see the typical corrections that are indicative of a market that is really not trending very strongly. If we look in this one area, and I've highlighted in red, let me go ahead and erase that. There we go. You can see that we had this real strong strength, nice size in the Henkin candles, and then we had the doji in green, a couple of smaller red, and then right back to a continuation of this major trend. You go back into a straight green candles. Market comes up and the candle size begins to get smaller. You can see that right in here. And then we had that first candle that we have seen in terms of color change really since the beginning of, call it the end of August, let's say, and the beginning of September right in here. My sense is that 1800 should be a more formidable challenge for the market to be able to take out and trade above. You can see that our highs are just below that right in here. And these highs are also matching. When we take a look at this particular high that came in, this is back in February, of course, of this year. We match it to our current trade activity, and you can see that they're pretty close, if not exact. And there is, at least on a tentative basis, a little bit of resistance in the market. Now, does that mean that we will see a correction? Well, the market has been so strong that what we typically would see, we are not seeing. So it's just a matter of keeping our stops in the proper place. Physical purchasers and investors should be not accumulating now, but certainly not liquidating either. Especially long-term assets, you're going to keep those anyways. But for those that have physical inventory and are looking to trade with it, in other words, buy it at strategic moments and then also offset it at strategic moments. I don't believe we're quite there in terms of offsetting, but we're certainly out of accumulation mode, because as we approach this $1,800 mark, my sense is that there is a significantly high probability that at least some resistance will be the underlying wild card that we'll see. And just quickly, prior to looking at silver this morning, I want to look at one more chart. It's our weekly chart in gold. Basically has some Fibonacci retracement areas as well as a Elliott wave count. And as you can see, on a weekly basis, although the candle size is getting smaller, it's still showing us a pretty solid uptrend. We've got straight green candles And the only thing worth noting is that we are seeing this trend itself beginning to diminish in strength. But by no means is the party over. However, on the other side, when we look at 1800, and this is what I talked about on the special video that I did with Kitco News and sent you out links yesterday, there can be no doubt we have really compelling evidence right in here in terms of a technical basis and here that this area could, or should I should say, provide gold with its first real test of resistance as it moves to higher ground. Now, traders realize it's very important that this market is able to move up, kind of decompress, so to speak, consolidate, and then move up again. And with that in mind, if in fact, let's play this scenario out, but if in fact this market does begin to stall in this area, where could we expect it to retrace to? And for that, obviously, we want to put up our Fibonacci retracement. As you can see, we've basically blown the chart up a little bit, and I've put in one Fibonacci retracement sequence. Simply put, we're fixing it off of these lows here up to our current high, which is right around 1788 and change. And our different levels, of course, appear. Our 23%, 1726. 1688 is a 38% retracement, and then 61 would be 1625. My personal sentiment is that once this market does peak out, as long as we maintain the type of strength that we had in the rallies, we should get a fairly shallow retracement. Now, wave 2 retracements can be as deep as 61% before moving and going back into the impulse phase, or in this case, our intermediate 3. The question is, A, where will we see a beginnings and some real conclusive evidence that the market is not consolidating, rather it is correcting? We really wouldn't see that until we had a real V. In other words, we had that pivot point. Areas that I might look at would be 1726 and low 1700s. I don't really think it's going to break below 1700, but Lord knows I've been wrong before. But we want to keep these numbers in mind if we do see the market beginning to correct. More importantly, we need to see how it reacts in this area because, as I said, I think we're going to find some consolidation. We should find a shallow retracement. I really don't think at this point we're going to see something very deep. Now, traders, silver to me, though, is a different story. We talked about this in great lengths last week, but this resistance that we have run into, which is in essence, call it $35, $34.92 is what I'm showing for just below, or excuse me, above these real bodies. You can see these wicks are going into this area, but you can see some very, very strong resistance. The other thing that is absolutely noteworthy and pretty easy to identify, this is why I love the Hankin charts, you get solid green. There's no doubt we're in an uptrend. We have got good strength. You get consolidation, sideways market, but it's not really correcting a lot. Again, another burst to the upside, market consolidates. Now, what is different? Well, what is different right now is if you look at the time periods of consolidation compared to the time periods in terms of length of this nice uptrend, what we're seeing now is more of an extended sideways trading activity. You can see that we're getting alternating candles, but they're not occurring like you get during a consolidating market where it's almost green, red, but you're getting clusters of red, clusters of green, clusters of red, clusters of green. That to me is indicative of a market that is actually found resistance and could in fact correct. And if it corrects, we'll chart a couple of spots. Of course, we're in at $29 per ounce. We're not going to get that price again. I don't think so, at least not in the short-term future. So I would like to, if possible, hold on to these positions as long as we can and ride them as high as we can, weathering any sort of a correction in between. However, as you know, we've got our stops up at 33. I'm really considering tightening them maybe to 33.50, although with 33.54 being our low, that might be cutting it a little bit close. And we'll have to really wait and see how the market wants to react and if it can hold $34 per ounce. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.